Welcome friends, in this free 12-hour technical analysis course, we are going to cover almost everything you need in order to become a scalper, day trader, or even a swing trader. We will focus on price action methods and smart money concepts through clear trading examples. You will learn step-by-step trading strategies that show you how to build your bias, when to enter a trade, how to set your targets, and the right way to move your stop loss. To make sure your trading skills are improved, this free trading course also includes 150 trade examples with the best trading strategies. By the end of this technical analysis course, you will move from a complete beginner into a more skilled and more confident day trader. If you are ready to go, let's do this! First of all, let me ask you a question. What kind of strategy do you trade? Are you an indicator trader like VWAP, RSI, MACD? If they make your life easier, use them. Or are you a smart money trader with the ICT SMC concepts like order blocks, liquidity, or imbalances? Maybe you are a full price action trader only, using trends, support and resistance, or even candlestick formations. You can also be an old school chart pattern trader like wedge pattern or head and shoulder pattern. Or you are a full volume based trader using footprints and volume bars together. Who knows, you can be any of these traders. Imagine that you solve your setup based on your strategy. Your strategy can be anything: indicators, smart money, chart patterns, volume trading, it does not matter. The moment you enter a trade, there is no more strategy, there is no more edge, and there is no more prediction. Only God knows if you will stop out or not. And only God knows if you will hit the profit target or not. You must accept this hard truth and reality. No one can see the future. So, what does an average trader do? Imagine you're a trader with 5 years of experience. This is what traders keep doing all the time. Jumping one strategy to another strategy every single week. Trading SMC this week, imbalance and liquidity, and then next week start using RSI, and the other week maybe using volume bars, and the next week start using the trends again. Every single week, a new strategy. But what happens in real life? As a person who used every single concept and trading methods out there, I will tell you what really happens in the real life. You are in your first week. An indicator, it can be anything, works perfectly. SMC does not work. Maybe using a wedge chart pattern, it works amazingly this week. Trend works great this week, but volume is not working at all. But look at the second week. The whole table changes. The strategies worked great last week, not working anymore this week. And the horrible strategies from the last week just started to work amazing this week. And this kept going on and on and on every single week. So what is the reality here? Actually, no strategy is better than others. Only God knows which strategy will work better or worse this week. One more time, we have no idea what will happen in the future. Then you are thinking, the biggest question in the world. Why the hell do we even need a strategy then? My answer is actually really simple. Routine and repetitiveness. By doing the same thing over and over and over, you gain a statistical advantage and a reliable data set. And the same routine makes you find setups easier and quicker. Which one easier? Looking for the same setup every single day, or a different kind of setup every single day? Just think about that. Then, what is this golden holy grail, the secret that traders kept searching for years and years and years? It is accepting this simple truth and reality. In trading, 99% of the things are out of your control. The market may go up or down any minute. The only thing we can control is actually our risk, the amount that we can lose in a trade. The holy grail that you have been seeking for all your life is here. Never lose very big. Once you lose a very big amount, putting that amount back on the table almost impossible. Learn to take a loss and move on. Let's simulate 10 trades with a 2-to-1 ratio. Basically, we will risk $100 to make $200. So the question is, how can we lose small and dynamically manage our trades? Let's focus on this question. Imagine you saw your setup based on your strategy. Your strategy can be anything. An indicator trading, smart money, chart patterns, volume trading, it does not matter. Whatever you wish for. I entered the trade, and the price went against me instantly. A quick and a sudden loss. This happens to any trader out there. So our first trade is a $100 loss. Again, entering a second trade. This time price moves in my favor. I am tightening my stop loss by moving stop loss upwards, limiting my possible loss this time. Whoa, what happened? Another sudden loss, but this time, as you can see, a partial loss, not a full loss. I am down another $50 at this point. Third trade. This time the price moves in my favor quickly, moving my stop loss to break even. And finally, a nice 2-hour gain, banking $200 this time. Moving to my fourth trade. Just like the previous trade, the trade is going well again, moving my stop loss to break even, making a no-risk trade. Whoa, what happened? A sudden break even. Nothing I can do here. Now the fifth trade. Nice, the trade is really going well. It gives a cushion to trail. Okay, going awesome here, I like it. I am about to bank 2R, 200 trade one more time. Oh god, it just crashed again. I just banked like $50 or something this time. Better than nothing. Now in the next trade. This time the price moves in my favor. I'm tightening my stop loss by moving the stop loss upwards, limiting my possible losses again. Oh man, what happened? Another sudden loss. But this time again a partial loss, not a full loss. I am down another $50 at this point. And the next trade. Nice, this trade is going really well one more time. It gives my cushion to trail. I am at zero risk at this point. Oh god, I hate trading. Another sudden crash ate my most profits here. And the next trade. This time I'm sure that I will bank $200 and grow the account. Nicely entered trade. What is this? Biggest wig in the world stopped me instantly. Man, trading is really hard, nothing easy at all. And entering the next trade. This time the price moves in my favor. I'm tightening my stop loss by moving upwards. Oh god, after many trades and partial losses, finally a full win. I thought I was never going to get a full win again. And another trade. Nice entry. Come on. I need a full win again. Please God, please. Moving my stop loss to break even. And this another big wig, another break even. So, what happened here? Let's discuss and learn. We took 10 trades. No great performance at all, as you can see. After 10 trades, we only made $200 and collected 2R in total. So many losses, so many break-evens, and mostly partial wins. Now, this is a real experience of real traders out there. This is the reality of trading. Rule number 1. What did we do? As you notice, we did not get rich here. But we learned something here. We learned to protect our account no matter what. Rule number 2. We kept our losses minimal as much as possible. We never lost very big numbers. And we made some profits as much as we can. Rule number 3. We dynamically manage the open positions due to the changing trading environment conditions. So what happens if you do this 100 times with a probably $100,000 real or funded account? What you will experience? You will gain the statistical edge of being profitable. You will notice slow but steady growth with a compounding effect over time. So, your takeaway from this video, in reality, there is no 99% winning strategy. If there was a one, Elon Musk and Jeff Bezos will be working for me today. All you need to do is put your efforts into mastering the risk management and actively managing your open trades. Today, let's talk about a crashing price that sweeps the liquidity in higher time frames. What can we do about it? What does it really mean? Imagine a very important liquidity level, a higher time frame liquidity level, or maybe an institutional level like previous day low. And you open the hourly charts. Imagine this is the 1 hour chart with 1 hour candlesticks. Price sweeps the important liquidity level. Then what will happen? How can we read this price action? How can we trade this? What you see here is 1, 2, 3, or 4 hour time frames together, basically mostly hourly candlesticks. Since we are day traders, hourly candles are really important. If you notice the price action like this one here, price continues to take out the low levels with strong breaks. This means still a weakness in the price. Seller power continues. Then, if you also see these big imbalance areas, the momentum is still strong in the downside, still favors the bearish power. At this point, the important liquidity level area can turn into a support and resistance flip location, basically a masterclass amplifier. I hope that all this part is very clear. But what if we see these large rejection wicks at the liquidity sweeps with multi-level hourly candles? This is the initial weakness for the sellers. It means that buyers are not happy with the sellers and trying to push back the price. A fight starts. And then if we start strongly seeing these breaks upwards, it means buyers finally try to take the control back from the sellers, try to start a rally. A possible reversal will happen here. And watching the imbalances in the area will help you a lot. Failing bearish imbalances followed by a bullish momentum imbalances is just great for us as bull traders. Okay, in the hourly charts, we solve this price action. Then how can we trade this? This is the main question, right? You just start watching the minute-based candles this time. In the minute-based charts, watching the inner liquidity sweeps, these small sweeps, we can take them as small gas stations to fuel the price. And maybe seeing a couple of inner support resistance flip points will boost the entry points like this. And sometimes price will only boost it by just imbalances. It is impossible to know for 100% sure which will work the best. Okay, let's work on a real life example. This is a single layout chart. I just try to put everything in one chart So you can see all the price section here at once. At the top, we have mostly hourly time frames from 1 to 4 hours. As you notice, on the left we have the 15-minute chart as a small guidance for us. At the bottom, we have the minute-based charts. 1 minute time frame open to see all the long price action. And on the right, we have the multiple minute-based time frames with 5, 10, and 15 minutes. This simple layout will allow us to see every price action with every time frames at once without switching between time frames. Let's start with the hourly chart and analyze the price itself. As you notice, price sweeps the PDL, the previous day level, the institutional level. Then watch what happens. Price rejects the area with large wicks. You can see it in all the time frames. With hourly charts, there is no continuation. This is the first sign of the weakness in the trend. After that, what happens? Notice carefully. Price starts to keep taking hourly candle highs. A possible reversal in action here. Buyers taking the control back from the sellers and try to push the price up. And along the way, you can see the bullish imbalances appear, adding more confluences to the movement. So if this is a reversal, where is the price try to move to? Yes, a clear level above, PDH, the previous day high. So, right here, we have a massive rally. But how to trade this rally in action while it is happening? We watch all the price action in the hourly based charts until this moment. It is time to focus on the bottom part, the minute based charts, and talk about it. As you know, we observed the rally in the hourly time frames. Now let's observe the rally in the minute based charts. Same price action, same price levels, but now we use the minute-based charts. Notice these small inner liquidity sweep areas in the 1 minute. All these small sweeps actually happen at the area of 5-minute imbalances if you carefully look at it. Remember, we are rallying towards the PDH, the previous day high, as our target. In these liquidity sweep areas, you can also notice the couple of inner SR flips as well, as extra confluences to push the price. So all these areas are extremely nice places to enter trades, or at least build some cost averages. And at the top, this last moment was almost perfect. A nice inner liquidity area created, just above the cool SR Philip line, but just the price never swept the area, as I'm watching the price live. But with this general strategy and the main patterns, we can find so many entries. I think this video needs to be studied like 10 to 20 times. This is not a simple video. It teaches you how to read the price, how to understand the price, how to connect to the price. Okay, let's have a deep talk on the structures and taking better trades. Imagine that you spot a nice multi-imbalance area. We know that the asset is trending and now pulling back into this zone. What can we do? It is actually quite simple, right? Wait for the inner structure shift and take a trade accordingly. This is the most logical movement and the trade. And then what happens from time to time? It crashes so hard on this that it stops us. If you carefully look at the higher time frame candles, like the 1 hour, 2 hour candles, you will see that buyers try to react, but there's not much power at first. This makes these trades tricky sometimes. But do not get me wrong, this setup works a lot of time, but not all the time. Sometimes if you are scared, not sure, or find yourself confused or conflicted, just wait a bit. Wait to see buyer power. With the high time frame candlesticks, highs being taken out, and buyers showing some power in our direction. So sometimes skipping the first reversal of market structure break could be a wise idea actually, and waiting for the first break of structure can be a great idea. This will give you extra confirmation and make you feel more secure in the trade. Will it work all the time? Hell no! Nothing works all the time. No pattern or no strategy. What we need is to work around 50 or 60 times out of 100 times. You can lose 40 times and still be okay in any kind of strategy. If you seek even more confirmation, there are a couple of small things. Especially this kind of inner liquidity sweep areas with the inner support and resistance flips are really great. These are actually A++ trade setups. In every trade you take, finding entry is good, but also looking for targets is important as well. Okay, this price rallies, but rallies to where? Possible targets that can pull the price. Previous day, week, and month's high points, or maybe kind of equal highs. It can be a parabolic liquidity areas and imbalances, of course. Furthermore, a bearish support resistance flip points could be a target. All these give me a reason for the rally. Extra confluences and confirmations are always great for the traders. Let's check out a couple of multi-imbalance areas and price reactions. Notice how the price reacts to the multi-imbalance zone. First, rejecting with large wicks, and then starting to take out the candle highs. This is especially visible in the 1 and 2 hour time frame in this example. This means that inside in the lower time frames, there are now a couple of break of structure happening after the first MSB. Let's look at another example here. First of all, we have a great target above, if you can see it, the monthly high with the imbalance combo. In our multi-imbalance area, price first pulls back and then moves as the buyers get stronger and start taking out the highs. Continuous break of structure happening in the lower time frames in this example as well. Let's look at this crash this time. As you notice, this is a downtrending asset and it is obviously crashing really hard. At some point, it pulls back to the multi-imbalance area, but what happens is that price takes out the candle lows again. Then the crash continues downwards. In the lower time frames, bearish structure breaks keep happening in this example. How about this example here? Actually, the same thing happens here. So the summary of this video could be that waiting for more confirmations may reduce your stop losses. But waiting is the hard part for any trader out there. I know that really well. For example, check this inner structure out with the lower time frames. The first market structure break, MSB, happens as you can see. And this is a logical trade with no problem at all. But for some reason you cannot trust this setup yet. Maybe it crashed on you many times and you got upset and scared this time. Then just wait for another break of structure to take the trade. And you will see more powerful side of the buyers this time. I'm sorry that there's nothing out there that will work 100%. Actually, not even 90%. If you can take 100 trades and win around 60 trades and lose around 40 trades, believe me, you are an elite, a professional trader. There is nothing beyond this because markets keep changing. Any strategy that you learn may work 80% one week and 40% the next week. So this is all about the long game, the data and the statistics of being in the net profit. That's all. In trading, especially using higher time frames or swing trading, the most important thing you find out is your overall bias. So you may trade in the direction of your bias. Easy trick to understand the bias is using high time frame candles like daily and weekly candlesticks. I was quite bullish on the Nasdaq in the recent weeks, but why? Let's learn it now. When you look at the daily or weekly candlesticks, the easiest approach to finding your bias is observing the imbalances. If you notice bullish, large imbalances, this is your first sign of strength of the buyers. The other trick is candlesticks. If the previous day or week high extremely strongly broken with the body like this is also a great sign. Basically, the buyers are dominating the sellers in both cases. However, if you notice that bullish imbalances started to fail and are not holding anymore, this is your first sign of weakness in the bulls. Or the break is quite weak. It turns back into a hammer shape, basically becoming a swing failure pattern, SFP. This is your weakness. It means that bulls are being rejected by the bears. When you notice a new bearish imbalances start to appear and it is crashing the price, this is your main weakness in the price. This means that sellers took the control back from the buyers. Or you noticed a very strong break downwards, another great sign of bearish bias. Here you see, in 5 minutes you find yourself a main bias. Not that hard, right? But how to use this bias? This is the golden question. Now you use main daily or weekly candles to find yourself a bias. In the high time frames, you understood this part. Rest is observing the lower time frames like hourly or maybe minute-based charts and using the fill concepts. In the upper trend, for example, using inner liquidity sweeps, especially with imbalanced tabs as your entries. This is not a complicated setup, actually rather simple. All you need is just some patience. When I was looking at the weekly Nasdaq chart, what I noticed? Nasdaq was actually crashing really badly, and we all expected a new strong breaks downwards. The bearish momentum actually failed right here, no break at all. Instead, look at the upper breaks. Stronger breaks and no swing failure pattern. However, at this time, look at this downward break. It is a swing failure pattern. Yes, it is a bearish break, but it is quite weak and instantly rejected by the buyers, turned into an SFP. How about the daily chart? Please observe the most breaks on the upper side. As you can see, strong breaks most of the time. But look at the downside breaks. All rejected and became swing failure patterns. So what does this tell me? Every drop rejected by buyers, and sellers cannot dominate the buyers. Buyers simply absorb every single drop, as you can notice. Basically, my bias is bullish. So my target was hitting this imbalance area above. It actually hit yesterday, Friday night. When you drop the time frame to hourly charts or minute-based charts, as a swing trader or even day trader, your main job is finding entries on the long side, since your bias is bullish. And your best chance is these nice fill points. Notice this triple lower liquidity point, and right below a large big imbalance. A magnificent place to fill up and keep going upwards. It is also actually supported by this SR Philip location as well. Again, once you find your bias, the rest of the job is finding lower time frame entries based on the fill points. I hope that this video was a clear example for you. We will do a theoretical lesson today, so you will understand all the price action we need after 10 years experience. I will start with a simple SR Philip line. What are the common support and resistance Philip lines? We traders enjoy combining price action with smart money concepts. The previous day, week, and the months are very important price levels. The low and high points are great and natural location of SR Philip lines as a start. If you trade much smaller time frames, you can also add common candles to this, like the 4 and 1 hour highs and lows. These can act as support and resistance Philip lines also. Then, what we look for is the multi-level imbalances, generally colliding with SR Philip lines. I commonly look for 1, 2, 3, 4 are multi-level imbalances. But I also try to check 15, 30, and 45 minutes altogether for sometimes micro scalping. As you notice, I keep adding more confluences to my setups for better trade locations. This is how I find overall trade locations. These two is very important. So, you noticed this price action and found yourself a great trade location. Then you need to ask this question. Do we have any reasons to go higher and higher? Do I have a target above? For example, I like institutional targets, such as previous day, week, and the month high location. For micro scalpers, the high of 4-hour candle also can be a great target as well. Furthermore, if I see any kind of equal highs, it will give me extra confidence on my targets. And finally, I always try to combine liquidity points like these ones with imbalances for much better targets. These are great price magnet locations. They are pulling the price. So what do I have here again? First, I find myself a great trade location with SR Philip and imbalances. And then I ask myself about targets, like the clear targets above a combination of liquidity with imbalances. These are the two major steps before taking any kind of trades. Okay, now I am ready to take trades. What can I do? First of all, as day traders or scalpers, do we have any kind of inner imbalances in the area, in the lower time frames? Like the 5-minute, 3-minute imbalances. This will give me an extra confidence. Right before my entry is the price sweeps any sort of inner liquidity. This is really important for fuel. You already know that the imbalance and liquidity combination is the main drive and fuel of the price action. After all this, I'm all set for trading. Now let's talk about the trading models. The first method will be the classic 2-hour quick setups, the market structure breaks with imbalances. The most classic way of trading. You already know this, I know. But these trades should be extremely compact and quick. In and out, in and out, in and out. So what else do we have? I actually hate waiting for the market structure break like most of you. Then instead, without market structure break, I can build a small average in my entry location. Basically, what you do here, place multiple small limit orders into your entry area, creating yourself an average, another version of quick scalping. So basically, what is the point of what we do here? In our entry area, we actually looking for a small PO3, the power of 3. Accumulation, manipulation, and the expansion. I hope that you get the main idea here. Now the problem we encounter so many times, price sometimes never stops here and keeps dropping and dropping and dropping. This can happen actually anytime since we do not have any kind of 100% working strategy. I also say this million times. We do not know the future, what will happen, we have no idea. Then, in this case, you need to wait. Wait for the stronger momentum. Let the price go first. Let it make the first MSP, the market structure, break. So idea here is skip the MSP and wait for the first break of structure, the BOS, and then start trading. Because this time price is more likely to hunt the targets above, this can give you more confidence and trust in the upwards momentum. Finally, the sniper trading that you all have been waiting for. Problem with sniper setups. They are actually not that common. It is not happening daily in my opinion. But I need to teach this because if you see one, take the trade. So, in our entry area, we look for a very compact version of PO3. An inner liquidity sweep with imbalance. This is how you find the sniper trading setups. So actually, this is a fractal concept. What happens here in your overall entry location, the trade location? A PO3 inside PO3, basically double PO3. Look carefully in my overall entry area. First, what we look for, what happens? First thing happening is price accumulates and then sweeps the liquidity as the manipulation. Then the expansion happens. You got this. This is the bigger PO3. Now, look what happens inside. A smaller inner PO3 happens. Smaller accumulation, smaller manipulation, and a smaller expansion. The sniper double PO3 setup. I will try to work on live example in the upcoming next videos. Today I want to also look at things from a different perspective as well. The mistake that we all do. We find a bias and we think that price will move on towards that bias forever, like non-stop. For example, look at this chart. I have a general long bias on this. Then I noticed this lovely equal low sweep with imbalanced tap. The price fully filled up now. For example, I decided to make a cost average based entry right here, starting from this point. Then the price moves around 2%, assuming 20x leverage. This would be a nice profit. This is how you get out. But what do we all expect? We wish the price to go higher and higher and higher. Yes, we have a bullish bias and targets. But reality is not like that. Price can crash any second. A tweet from Donald Trump, or maybe a bad global news. Sometimes any economic data can ruin our trades any moment. So at the end, you cost average or use a classic RR, it really does not matter. You must be quick and compact. Let's say you enter a trade like this. Less you stay in a trade, it is much better. Please do not dream like these 10R trades that you saw in the social media. This is just false. 10R means you will gain 10% in the account with a single trade. Can you show me one single trader, a person can do this constantly every day? It is practically impossible. Secondly, I want to talk about specific trade points. In any chart, when you look at it first, it will just feel ugly and confusing. Just like this chart. But you need to look closely. Then you will be solving the small puzzles. Notice the triple equal lows here. A sweep in here can give you a trade idea. Why not? Maybe a little cost average entry. It is quite possible. What if you hate cost averaging? Then wait for more confirmation. Notice the structure break here, then the small pullback into imbalance, a nice 2-hour trade. Another great possibility in my opinion. Later on, notice how the price creates another equal loss right above the imbalance zone. This is another trade idea, why not? A place that I can build a position by using cost average techniques. Because I know that price has now filled up and I can try to get a quick trade here. Now check this chart. Another ugly and confusing chart, right? After this nice strong break, notice how the price creates these equal lows right at this point. And actually, people building long positions here. And look closely. These trades are not wrong or right. Actually, they are working if you look at it closely. 1 hour or 2 hour gain, they will give you something. If you just can't stop being greedy like 5 hour or 10 hour trades, you can make some money out of most trades that you enter. If you do not take profits or tighten your stop losses in time, probably you will be the food, you will be the liquidity sooner or later. Notice how the price sweeps all the liquidity, all the stop losses here. And in my opinion, another great point for me to build a DCA, a yo-yo style cost average trade here. Why not? Quite possible. Or I will just wait for a structure shift and use a small compact 2-hour trade. This is how you trade. Small, quick, and compact setups. Because markets are really cruel, especially in 2025. Conditions can change any second. Your morning bullish bias can turn into a bearish bias in a couple of hours. I want to talk about the very simple patterns that I look for most of the time. If your eyes can get used to these patterns, finding them is actually not really that hard. For example, you see an overall bullish momentum in the price, in any chart. Price is obviously going up. And you're seeking entries in the bullish momentum. Then you notice something like this one here. Price makes a quick stop, sweeps an inner liquidity area, maybe tapping an imbalance. I call these the gas stations, the areas that price looks for the fuel by hunting the stop losses. But if you can see the same structure with equal lows, now it can be even better for you. This means a lot of stop losses in a single price level, a great source of good fuel. Furthermore, you can add extra confluences to these patterns, simple support and resistance flip lines. It could be like the previous day highs level, or maybe 4-hour stop, the high or low. Any significant flip level will make the entry area stronger. This is why I call these amplifiers in the masterclass. I hope that all these are very clear for you. Now, how to trade these? You can obviously use a risk-reward system, very quick scalps. Nothing wrong with these ideas. However, placing a stop loss could be troublesome because I do not know how much the price will fall back in the situations. Or you can try to build small averages in the field zones, in the field areas. Basically setting a series of small limit orders to create an average trade. Unfortunately, there is no clear choice here. You have to try both and decide for yourself. Okay, let's talk about a couple of examples. Now, what you see here is the Nasdaq chart, but it can be any chart that you can imagine. Bitcoin, Forex, gold, or even oil. The time is 9:30, the New York local open time. Probably the highest traded time in the world. On the left, we have the 1-minute chart, and on the right, you can see the 5-minute chart. See what happens here. Look carefully. A perfect equal lows, and right below them, there is the imbalance at the opening. Price fills up and starts a rally from this point. This is the moment of the market opens. Actually, it can be really hard to catch this at the market open, but the pattern is here as you see. Also notice the perfect SR flip location. This is actually the most perfect example of the pattern that I enjoy using a lot. Let me focus on the 1-minute chart alone from the market open. Okay, right after the market opens, then what happens? The same thing. Price sweeps an inner liquidity and taps the imbalance, fill up one more time. It is again an area of small SR flip location if you notice. Then we continue. Price creates this inner trend liquidity and then it sweeps it all once and taps the imbalance. This gives you another fill point one more time. After that, above, the same pattern happening again, but this time price not fully hitting the imbalance that I wish for. But look above. A perfect equal lows one more time with the imbalance. Also, the SR flip location looks great. A perfect, quick scalp location. After all that, a similar structure one more time, but this time it fails. You ask why this is failing. Actually, this proves you that every single pattern in the world will fail from time to time, without exception. Nothing can stop this. What actually price is doing here, creating this larger trend liquidity if you notice. It sweeps all the stop losses, crushes into this imbalance with the support resistance flip location. I think you got the overall idea here. Actually, this is a very simple pattern, but just your eyes need to adjust to see this. So, this is what I look for most of my trades or even investments. First, price sweeps a sort of liquidity if it can, taking out some stop losses. Then maybe hitting an imbalance or possibly a BPR, balanced price range, or it can be a multi-imbalance level. Finally, if I can see an SR flip location or a masterclass amplifier could be amazing to support my entry as extra confluences. Again, it will not work all the time. It is impossible. Nothing works all the time. But this is a highly accurate pattern. It has a high accuracy, designed for the long-term results. Today, let us discuss these 3 entry models which I use the most and how to find great entry locations with momentum strategy. Do not worry, I will go into extreme detail in step-by-step action. So, the BAN coin was one of the top gainer coins of the day and it had a highly strong momentum. And right in this location, you can notice price dips into this multi-level imbalance location, tapping the 30 and 45-minute imbalances and 1 and 2 hour imbalances as well. This is one of the ways of finding entry zones extremely quickly. This method will work on any asset like Forex, stocks, gold, as long as they have a rally or crash on that specific day. Now let me drop to the 5-minute charts and talk about low time frame entry models. Okay, first of all, this is the exact moment of 4 different imbalances being tapped from the higher time frames we just observed. This is how you find your entry zone and start seeking trade entries. Notice what really happens here. Price sweeps liquidity and further taps into these inner imbalances on the left. At this moment, we know that this price has filled up. We have the fill to move upwards basically. And right at this point, you can make a confirmationless entry, only based on the fill. But be really careful. In order to use this entry model, you will need a large stop loss. Because the price can drop further, your stop should be large enough to digest for extra movements. Next way of entry is seeing a price switch between buyers and sellers and the trend itself. Best way to do this is using imbalances. Notice right here a 5-minute bearish imbalance fails, and the momentum imbalance start to appear in the bullish side. This is a kind of pre-confirmation actually, without a full structure shift. This could be another style of entry. My last model is my most common model, with full confirmation, using the market structure break and the imbalances. As you can see, price breaks upwards and dips back into this BPR and imbalance location. And this is actually the overall PDH, previous day high amplifier location as well from the masterclass, making the area stronger for the entry. I hope things are clear enough for you at the moment. Okay, let me make a very clear recap for you, so things will be much better to understand. First, you find yourself an entry zone in the higher timeframes, like multi-timeframe imbalances, or maybe order block demands, or optimal trade entry, or big liquidity sweeps. It doesn't matter. And now you are about to make an entry. You notice the inner liquidity sweep with imbalance step. Now we know that this price is filled up here. I may jump to trade here with a very large stop loss, or even building a yo-yo based cost average setup. Remember, this is the riskier way to trade because we have no confirmation at all here. Large stop loss or cost averaging is essential here. Next is kind of a pre-confirmation, which I call the price switch. What you are waiting for here is a change in imbalances, a failure of, for example, a bearish imbalance, followed by a working bullish momentum imbalance. This at least gives me some sort of confirmation here. And the last model is the model that you all know, waiting for a full shift in the structure based on the market structure. This is the confirmation type of entry. I think this is the least risky way to trade, but it takes a lot of time to wait for this. So not bad, we covered my most favorite and best strategies and entry models in a single video. Today, we will do a different kind of video. Today, you will discover your trading style and improve yourself at becoming a better trader. Do you know why so many traders keep failing? Because they try to replicate others 100% without thinking about their personality, lifestyle, or emotional levels. This is the video about finding your trading style. There are 3 main trading styles. First, pattern traders, using repetitive patterns mostly based on RR entries. Second, order traders, using specific price levels based on multiple order entries. And then the session traders, using session openings, trading mostly the volatility. Now, as a trader, you must try all 3 trading styles and record your performances and see which one suits you the most. Let's talk about the pattern traders first. Pattern traders observe the repetitive patterns in the markets and wait for the entry. Based on a specific price action, they determine their point of interest areas for the entry. This can be any pattern that you can enjoy. What you see here is one of my most favorite patterns to trade, a combination of multiple smart money concepts. Now the pattern traders use broker alarms so much. Once they have a POIA area to trade, they generally set an alarm right above this area. Once the alarm fires off, you are ready to trade. But setting one alarm is mostly useless. You need to set multiple alarms on multiple asset classes so you can have a higher chance of trading. This is the core of pattern traders. The good side of being a pattern trader is you can trade anything you wish for, and you'll be looking for the same patterns everywhere. However, checking all these patterns in tens of other assets can be quite troublesome. This requires high effort, discipline, and time. Pattern traders generally have regular morning routines. You check all the assets and set your alarms. They can be day or swing traders based on their preference, but the patterns they trade always the same. The worst side of being a pattern trader is an alarm may never hit, or it can fire off while you are sleeping. There's a chance of not trading every single day. The best side of the pattern trading is, now you know that there is an A+ pattern, a pattern that you really enjoy to trade. You simply set your RR-based setup and leave the screens alone. On the other hand, RR-based trades can be tricky if you are trading the low time frames. Too many possible stop losses. How about the order traders? What kind of traders are these people? Order traders mastered order management rather than patterns. They have a large point of interest areas. They generally use Fibonacci tools, gaps, imbalances, or different kind of tools to determine some specific price levels. So they are not precision traders or snipers. Instead, they are order managers. These traders do not prefer using RR-based setups. Instead, they make small and periodic entries on certain price levels. And they dynamically manage their stop losses. They do not have hard, certain stop losses on some price levels. As you can see, simply they are orders, position, and active risk managers, giving active decisions on the go. Just like pattern traders, order traders can trade anything they wish for. You'll be looking for the same price levels, similar levels everywhere. Order traders mostly prefer specific time frames. Many order traders combine hourly and minute-based time frames, determining a good and large point of interest areas. However, placing so many orders can be quite troublesome. It can easily get out of hand and confuse you a lot. When you see order traders, you will notice that they have like crazy win rates, like 80-90% win rates. However, this is mostly an illusion, since they have very small positions without hard stop losses. They generally tend to make small gains, but when they lose, they will lose quite a large amount. You can make like $50 every day for 2 weeks, but you can lose $5,000 in one single day with bad management of orders. Our last type is session traders. This is one of the most common traders in the world. Session traders prefer market openings, such as London or New York Open. They are generally volatility scalpers. Most common is New York Open at 9:30 a.m. You will see these crazy price movements when the market opens. Most session traders are micro scalpers. They use extremely high leverage or high amount of cash. Most use funded accounts. Scalp the charts in matter of seconds or minutes, extremely quick in and out. However, a session trader can also be a pattern or order trader at the same time. They can wait for their favorite patterns or just make multi-order entries and manage them actively. Session traders prefer to master one asset generally. The one that traded most is NQ Futures, the Nasdaq index. Biggest problem of session trading is there may or may not be a great setups or patterns at 9:30 a.m. We don't know that. Basically, you'll be trading whatever market gives you. High volatility is great for our traders because we make money when the price moves. At the same time, handling a high amount of money in 1 minute time frame is a crazy business. A mistake can cost you a lot of money. The best part of session traders is it is like a fixed part-time job. You wake up, wash your face, wait for 9:30 a.m. and trade it until 11 a.m. and you are done for the day. After 11 a.m. you are free to do whatever you wish for. So, my friends, which one are you? Are you a pattern trader? Pattern traders are relaxed and casual traders. They have no rush at all. They only trade their patterns and wait most of the time. They set RR-based trades and leave the charts. Or are you an order trader? Order traders are more position managers rather than traders actually. They manage positions and risks. They constantly watch the charts and handle the positions. They do not enjoy RR-based entries. Instead, they use dynamic orders. If not, you may be a session trader. Session traders generally see the trading as a part-time job. Open the charts at 9:30 a.m. and try to trade whatever market gives them and leave around 11 a.m. That is it for the day. Okay, have you tried them all? Have you decided yet? Please type your style on the YouTube comment section so I will know what are you. As you already know, there is an unending fight between buyers and sellers in the markets. As a trader, your best approach should be joining the dominant parties. When you look at the 15, 30 or 45-minute candles, or even early time frames like 1, 2, 3, 4 hours, you'll notice this kind of price action, constant green candles. These moves generally start with a nice momentum imbalance. This is a buyer dominance. Or the constant red candles ignited with an imbalance. This is a seller dominance. So, the question is how to join these dominant parties and how to trade these in action. What you are looking for here is a top gainer coin of the day, called with a weird name of CHIMS. And also, why do I use this indicator called ICT high time frames? It shows me all the price action you need from multi-time frames. First of all, notice how the early party started, where the initial rally ignited. As you can see, around right this imbalance area. What happened after that? A very dominant buyer rally started. Let's take a look at the area together with the 5-minute full chart on the left. Notice where the party started here again, and then the dominant buyer action followed. More importantly, notice this momentum imbalances area inside the dominant party. The moment that buyers push the coin instantly. Now, I want to watch the price action closely again in 5-minute charts only. First of all, notice how the early rally started one more time. It started right around this SR Philip area. But can we go back even further and evaluate the market structure first? Here is your earlier structure box with the protected low. Then it follows another break and a new structure box with new protected low. As a classic trader, you can make the entry right here like a compact 2-hour setup. But are you afraid of too many stop losses? Is there another option here? Let's discuss it. I know that many of you are very tired of stop losses with classic risk-reward setups. Then your only option left is using multiple orders and creating like price averages. Or if your broker allows, create multiple orders with dynamic stop loss management. To use multiple orders, you must determine many entry areas first. Let's check out. First of all, Fibonacci is a great tool. You are making your entry here with SR Philip area on the imbalance with EQ from Fibonacci. This is your first partial entry with your mental stop loss. Then let's see. There is this another great level here. But why? Why this area? Because if the price drops further back, it will be the optimal trade entry area, the golden zone that combined with the inner imbalance. And your last entry should be under this area for the further imbalance and this inner deep liquidity area. So, what did we do here to avoid direct stop losses? For example, instead of using a risk reward like risk a $60 to win $120 setup with 2 hours, what we did is we divided that $6 risk into 3 small pieces with $20. We made multiple entries with our mental and dynamic stop loss in the case of price drops further. In another sense, we just created ourselves an average price. Now, how about trading with the dominant party? Let's talk more about the continuous price action. See what happens here after our first entry tries. Structure breaks one more time and creates another structure box with a new protected low. Now we also know that price is pushing so fast. Buyers are quite dominant with those green high time frame candles in a row. But again, you are very afraid of using the risk reward tool because of the constant and instant stop losses. What we do is again jumping with a partial trade order here, joining the dominant price movement with the buyers. You see what we do here with other time frames clearly. Notice where we joined the price movement. We jump to the dominant price movement of buyers with high speed. We are not afraid because we are not using a risk reward. We are now entering with partial orders. So what if the price drops further again? What you do here again, create other multiple orders until the protected low area. As long as we protect this low, we are bullish here. So basically you are not cursed to use RR tools and be stopped out like 10 times a day. There are other ways of trading like my yo-yo style trading from the masterclass. All we do is a very simple price action of dividing orders into pieces and making multiple entries instead of making entry at once, while we dynamically manage our stop losses and give our trade some room to breathe and recover. As you already know from the masterclass, what we try to do is actually a very simple strategy. We try to identify momentum imbalance to take trades and find ourselves in the overall entry zone. If we can find an additional support and resistance flip area, this will improve our trading ideas. Then the rest is looking for a low time frame market structure break with a nice imbalance or a masterclass rally strategy. We try to take around 2 hour trades. We get in and get out, targeting the closest liquidity areas above. This is perfect up until now. However, on a weak market day, what happens? It feels like our trade is working for a while. Then a sudden crash follows it and we stop out. I'm sure that you experience this a lot. So, why our strategy works great some days and not every single day? how can we quickly understand we are in a strong or a weak market day? Remember, if you are a momentum or trend trader, you will need power to trade, a strong power to get the trade running. So, our first trick is quick correlation check. It is an extremely simple idea. You already remember the totals from the masterclass. On a strong day, I want the totals to be on the positive side as much as they can. Then I have three major coins to understand: Bitcoin, Ethereum, and Solana. I also want them to be positive on a strong day. And finally, as you remember, the USDT dominance is the negative correlation from the masterclass. You can also add the dollar index as well if you wish. I want them to be negative that day. On the other hand, a weak day is the exact opposite of what we try to do. Totals negative, major coins negative, opposite indexes are positive. So, all you need to do is put all these coins into your list right above the altcoin list. As you can see right now today, totals are negative, around minus 1%. Major coins are also negative, around minus 1% as well. And the USDT dominance, which is the negative correlation, is positive, around plus 1%. So, what does this indicate to me? It means that today is overall a weak day. Sellers are more dominant than the buyers today. Let's talk about the second trick, the altcoin check. As you know, there are over 200 altcoins to trade every single day. When I quickly check these coins, if the majority of the coins are positive, then we have a strong buyer attention today, which is great for momentum trading. But if the 80-90% of coins are negative, then it is a red flag. Sellers are much more dominant compared to buyers. This is an extremely simple trick, but works great. For example, this is my altcoin list. I have over 200 coin futures in this list. Right at the moment, I have only like 14 coins in the positive side. But if you scroll down all the list, you'll notice that we have over 200 coins in the negative side. This alone tells me so much. I get this weak vibe from the coins. Sellers are much more powerful compared to buyers today. Third trick is the power shift. Remember, buyers and sellers always cycle. None of them can be dominant to each other forever. They are like yin-yang, balancing the power. Right in the middle of the negative and positive coins, there is the midpoint. So, if you notice that the number of negative coins is rapidly increasing, it may mean that the sellers are gaining more power and start to dominating the buyers. However, if the opposite happens, the number of positive coins start to increase, it may mean that buyers are gaining power and start to dominating the sellers. For example, this is my altcoin list again. You can see the midpoint coins with around 0% gain, which is not negative or positive. The area stuck between buyers and sellers. Remember, we had only 14 coins positive today. But you just started to notice that this number is increasing. Maybe 20 coins started to become more positive, or 30 coins become positive compared to this morning. It means that a weak day can turn to a strong day slowly. Remember, this may happen in the same day. Or you just notice the opposite happening. The number of the negative coins keep increasing. Then a strong day can turn into a weak day. This is an endless cycle. This is a very easy trick to see if there is a power shift. My final trick is the global markets. Remember, all markets and all the money connected each other in the world. You will generally notice that they act together in the strong days. Stocks, gold, coins. Or they tend to crash together. Stocks, metals, and coins. Now, this is not a very effective sign for crypto trading. However, I wanted to point this out. As you can see here in the list, S&P 500 and Nasdaq are crashing today. They are not alone. Gold and silver are also crashing. And this money movement also affects the coins, as you can see. Bitcoin, Ethereum, Solana is also crashing. All these give ideas about if the day is strong or weak. So, at the end, how to set up a good list to see everything is happening in one single layout. You can see the tickers here. This is my usual list to trade nowadays. I try to update you with my changes as soon as possible. I have the totals. I have the world, mostly stocks and gold. I have the major coins to quickly check out. I have negative indexes, which is USDT dominance and dollar index. And at the bottom, we have our usual coin futures list, which has over 200 coins. This is all the list to understand if we are on a weak or a strong day. Okay, let's remember again. Yin and yang, buyers and sellers, weekday or strong day. Market always cycles between these. One side cannot be dominant to other side forever. Both sides need each other to exist. Also remember this very well. Market can shift on the same day. You woke up now, made a cup of coffee, opened the charts, and the whole world is crashing. You went for a walk and got back 2 hours later, and the entire world may be rallying. No one knows what will happen. Personally, I enjoy taking long trades when I trade momentum-based strategies. It is my preference, nothing special. So on a weekday, it is best to look for short trades. Just flip everything you have learned in the masterclass. That's it. Of course, you can still take long trades on the weekdays if the setup is so good. But remember, you have the lower chance of winning the trade. So in the strong days, our best trades happen. Trades run much easier and rallies are very quick. In the end, momentum coins can act very independently. I've seen a coin rally 60% while the entire world was crashing. When it comes to trading, no one knows the future. Anything can happen in any moment. If you woke up today and started to look for trades, today was a really strong and positive day for the coins. Most of them rally with large green daily candlesticks, and also USDT dominance is mostly weak. And there was this lovely coin to check out, GMT USDT, one of the top gainer coins. By using our beloved indicator called ICT High Time Frames Indicator, you can see and analyze the multi-time frames at once. The early rally started way before with this imbalance area, but we are not concerned with it. What to look for is recent price action. Right at this multi-imbalance area, price pulls back and hits this 4 multi-time frame imbalances at once. This gives you the perfect idea and zone to look for a trade. Now, switching into lower time frames, the price action will be more clear and meaningful. You will see it. First of all, this is the point of our 4 imbalance hit from the momentum layout. The area that you will be looking for a trade. At the top, you can see this liquidity gathering. It is kind of a relative equal highs, but not perfect. Hard to call them equal at all. But at least we know that liquidity gathering upwards. In our entry location, you can notice a simple structure shift. And you can use this as your entry. Now, this is an idea of a 2-hour compact setup. But I want to discuss further. First of all, what really happens here? What are we actually trading for years? Yes, price hit these multi-imbalance locations for us to look for trades. No brainer, we all know that. And we also use this liquidity as our target, basically aiming for stop losses. But actually, what really happens here? We need to discover it. What really happens here is a simple power of 3, PO3. Actually, the whole idea of momentum coin scalping is based on a power of 3 setup. You can see the clear analysis of the PO3 in the candlesticks on the left. What does the power of 3 actually consist of? 1. The fill. Price sweeps, liquidity, and possibly hits an imbalance area, fully filling up. This is generally the first step. 2. Target. Target should be in the opposite side of the PO3. It should be either liquidity or imbalance or the combination of both of them. 3. The structure shift. Structure must shift before the trade. So the buyers and sellers change hands. I hope that this was an educational video for you. The ultimate price action setup. Let's continue practicing our day trading and scalping skills around the market openings. Since Nasdaq is the most commonly traded asset in the world, I will work on it. But you can also use this with any kind of assets like Bitcoin. Before we start, the market opens at an extremely important price level. This blue line indicates the previous month's high point, which is broken strongly, as you can see. And if you look at the 1-minute chart again, you can also see the inner SR Philip location, classic price action method. Then please notice this inner liquidity area created and how the price sweeps it. Now this is a very large sweep actually until the previous month's low area. Sometimes the sweeps can be this big. And at the top, notice the small inner relative equal highs as an inner target. And all this price action actually happens at the 5-minute imbalance area if you noticed it. Okay, let's look at the hourly charts above from 1 to 4 hours. Notice how the buyers took the control very early and starting to pushing the price crazy in the pre-market before the market opening. You can also notice the momentum imbalances which supports the bulls in this movement. Okay, let's make an overall summary here so you can understand the price action really well. In the pre-market before the 9:30 open, we know that buyers gained the control, pushing the market up. This is obvious. Then with the market opening, we notice this lovely inner support and resistance Philip location. It also happens at the area of previous month amplifier. It is a classic masterclass amplifier which I teach. Price sweeps the inner liquidity in the area, right above the SR Philip, also creates these relative equal highs above for us as an inner target. And all this price action happens at the 5-minute imbalance area. If you check out, you will also see the multiple lower time frame imbalances as well. Now, this is a perfect fuel point for any kind of rallies. Extremely good setup with real live action. Let's look at another day from the last week and observe the price action in detail again. In the pre-market, you can see the previous day's low sweep. But this time, there is no continuation here. Instead, price sweeps the area and reacts back so strongly. This tells us a possible reversal here. If you check the 1-minute chart in detail, you can see the price makes the market structure break, followed by the first break of structure. Obviously, sellers are losing power here, buyers pushing the price back upwards again. After the market open, you can see a very similar structure, a similar pattern in action again. First, the SR Philip area with 1-minute imbalance location, followed by the inner liquidity sweep location, leaving us an inner target with equal highs above. Extremely simple and classic smart money action happens here. And the price fills up here strongly, rallies. Let me do the quick summary. In the pre-market, price sweeps PDL and reacts. There is no continuation. It is not a forward trade anymore. It is a highly possible reversal now. After the market open, we notice a small SR flip with inner liquidity sweep, and the price sweeps the area, fueling up, targeting its own liquidity above the small equal highs area. You see one pattern happens daily if you carefully look at it. Okay, we are on the same day, and bulls control the price obviously. Remember, we always try to trade with the dominant side of the current existing movement. If you check out here, another similar, actually same pattern happens. Our classic combo of 3-4 special moves together. It is like a game actually. Now I think you understood all this pattern and the strategy. Now one question remains here. Can we trade this area between? Well, if you carefully look at it, what are we gonna trade here? In my opinion, there is no concept here. Nothing I see clearly, to be honest. The only thing you can do here in this between area, probably jumping to a rally with a small order to grab some cash from the movement and the momentum itself. That's it. You woke up today and markets are crushed again. All thanks to President Donald Trump and his uncertain politics and policies. In this uncertain environment, trading can be kind of confusing, but we will keep doing what we do best, follow the trend and trade the strong or weak assets. This lovely coin was in the top losers list this morning and it was suitable to trade. The moment I saw this multi-imbalance area, I knew that this could be a great location to look for short trades. But again, we shall not blindly short it. Yes, it is a usable strategy, but since the Trump in the White House, blind trades are not good at all. We must try to combine high and low time frames as much as possible. Let's go down into lower time frames and talk more about these yellow circle locations. So in this 2-minute chart, you can see that this yellow circle point is representing our multi-time frame imbalance location. Basically, our main overall area to look for trades. Also, if you look at the overall trend, you can easily see that we are in a very strong downtrend. Price is just keep pushing downwards. So no need to fight the ocean and waves here. Instead, we will flow with the market. Let's zoom in the trade area and talk more now. Let's have a brainstorm here. First, where can the price move? Notice these lovely equal lows right below that waiting for us. This is our initial target. What else do we have here? Very nice support and resistance flip right at our multi-level imbalance area. Furthermore, if you use your Fibonacci tool to this strong break, there are things like optimal trade entry location with the inner 2-minute imbalance. All great for now. We found a very nice location for entry. What happens next? You can see this inner structure break, which price breaks and instantly pullbacks to this inner 2-minute imbalance. This was a nice entry location for a 2-hour setup here. But you can call this is a very fast action. Now your second option is waiting for the next break of structure and inner pullback. Like this one here. This will give you another set of small trade. Not an amazing trade, but better than nothing. Now, if you just zoom out, this is also a very special location of PDL and Monday low. Basically masterclass amplifier locations, as you can see, which makes the trade area more trustable in my opinion. Since I get many questions about forward and reverse trading, let's talk about it. Remember, this can be applied to any kind of asset, coins, futures, forex, and even stocks. We will start with forward trading. Let's see what happens in this USA CAD 5-minute chart and try to understand the price action. A rally starts from this point to hunt above PDH, the previous day highest institutional level. But why this point? Is this a random point? We will talk about that in a moment. Okay, what happens here? Market structure breaks followed by an imbalance. Then if you use the premium and discount tool, the price hits the discount area. A nice thing is that you can build a cost average in this zone. A combination of market structure break, imbalance, and a Fibonacci EQ area. After all that, what happens? The first break of structure followed by another imbalance and discount zone. This label should have been the BOS, not MSP. Sorry about that. Do not mind that. Then the same thing happens one more time. It keeps going on until the final PDH hunt. There are actually 3 trade chances here, as you noticed, and ideal places to build small cost average trades. Nothing overly complicated here. Now, why is this level very important? Was it a random point? Let's talk about that. Look at the right side, the higher time frames. Where is the rally actually starting? The moment of hit 2 and 3 are imbalances. Price take the necessary fuel here and ignite the rally until the PDH hunt. Again, what happened here? Price taps the multi-hourly imbalance zones and fill up. Then the bullish structure starts. First MSB, then BOS1, and then BOS2. Along the journey, price makes small pullbacks to inner gas stations to fill up and up again with imbalanced locations. Also getting into the discount zones as well. This structure keeps going on until we hunt the PDH, the previous day high, the institutional level. All great, everything clear, I hope so. Now, then what? We hunted the PDH. Now, what may happen? We actually have 2 options here. Here is where the people make a big mistake. They think that the moment we hunt the PDH, the price will reverse and pull back immediately. This is actually not true. If the inner structure is not broken, price can go higher and higher and even use the PDH as a support line. The second option is our reverse trading ideas. But for this to happen, we need to see a clear structure shift in the price action. In this case, PDH can be our resistance, not the support. As I teach in the masterclass, previous day highs can be a great amplifier to your trades. Let's see what happens in this example. Market structure breaks followed by another break of structures. Sometimes people do not feel really confident on the first market structure break after a huge rally. Even myself feel doubtful from the time to time. Then wait for the first break of structure for better movement. The rest is classic smart money, imbalances and discount zones to trade. I hope that all these are very clear for you. Nothing complicated here. Then you may ask this again. Why the reverse? Why the price falls? If you open our hourly time frames one more time, you can again see that we use imbalances, but this time as our targets. Maybe the price will rally again from here. What we do is quite simple. We follow the three rules of trading, the combination of liquidity, imbalance, and the structure. If you combine all these three in your trading, you can find great entries as well as targets. Today, I'll show you one winning and one losing trade, and also share the easy secret of trading that everyone keeps forgetting. By using our lovely indicator called ICT high time frames, we were able to see possible entry location in this coin. But also we can read more than that. We can read the power and the momentum. Notice the two are chart deep on the right. How the imbalance fails right here. After that, bullish imbalances appear and hold really well. This is the easiest trick that you can see the dominance in the market. If you just check the recent price action, price is holding against these three multi-imbalances, giving us a possible entry zone. When you open your lower time frames, like in this case, it is the 3-minute chart on the left, you will notice the exact reaction point right here. Let's check it out in even closer action. What happens here? An inner liquidity sweep, followed by market structure break, leaving this entry imbalance, also overall inner SR Philip location. What an amazing trade, right? It is just amazing. Two are set up here. Or it is not. Let me show you a loss right now. Here is another coin from today, called bread. Again, you can notice the multi-imbalance area, a great location of an entry. This time actually 3 imbalance type at once. Again, opening the 3-minute time frame on the left, so we can see the exact point of the reaction. Just like the previous example, everything is same. Now, I am zooming again one more time to talk about the exact entry. In our entry location, price sweeps inner liquidity, then a very strong market structure break. It is also a great inner SR Philip location again. Then this great imbalance area. What an amazing setup to enter. But wait a minute. It failed. It just stopped out. What a crappy indicator and a strategy. It is just crappy and useless. I must quit trading right today, right now. Just look at these two trades. Two different coins on the same day. One win and one loss. And it is 100% same setup. We must think about this for a second. So let's question this. What really just happened here? The winning setup. Multi-imbalance area, inner liquidity sweep, inner SR Philip zone, market structure break, and imbalance entry. What about the losing setup? Multi-imbalance area, inner liquidity sweep, inner SR Philip zone, market structure break, and the imbalance entry. Wait, what? 100% exactly the same setup. Zero difference at all. How is this even possible? It sometimes works, and it does not work another time. It is all because you cannot see the future. Every strategy will work and fail. Most traders avoid accepting this. You are avoiding accepting taking a loss. Your inner fear does not accept this reality and it keeps searching for that holy grail with 100% win rate. However, the secret you seek is actually already here. It is inside mathematics and statistics. If you just take the same setup 100 times, just like tossing a coin, if it only works 50 times and fails 50 times, then you'll be making money. This is the end of story. This is the end of your holy grail search. This is the truth that you have been seeking for years after years. We will continue to learn step-by-step day trading with our most practical and best trading examples. Let's have a look at this chart. Ignore the asset. It could be Bitcoin, gold, Nasdaq, Apple stock, or any kind of forex pair. Since price action is universal, we always try to trade the same or similar patterns. Notice this lovely previous day high line. It is a clear target for us. But also check this out. Perfect equal highs as well. Very good. Now notice these equal lows below. Now it is like a toast between equal highs and equal lows. In this example, equal highs acting as the target and the equal lows acting as the fill. But where is all this price action happening? Notice the chart above. A multi-high time frame in balanced location. So this trade is not randomly chosen. There's a logic and pattern behind it. Let's get back to the trade. What else do we have here? A great support and resistance flip location combined with an inner imbalance. Now this is an extreme example of a A+++ trading setup, a top-notch pattern. It is like Aston Martin or Ferrari setup in the price action world. So we must observe the price action again, then you can see things much more clearly. First of all, we have noticed that price is riding towards the previous day's highs above. And it also has clear equal highs above as well. At the bottom, price swept the equal lows and dove into this inner imbalance area at the support and resistance flip point. All good, I believe. Let me go over it. Step 1. We have a magnificent target above and we have confirmed a possible direction. So we have kind of a bias now. Step 2. In order to move our car to hunt the targets, we need fuel, a gas station. At the bottom, what is price doing? It sweeps the equal lows, taps the inner imbalance, and hits the support and resistance flip zone, a most perfect fuel. Step 3. Where is all this action happening? Remember, this is not an ordinary location. It all happens at the multi-imbalance area of the 30-minute, 45 minutes, and 1 hour levels. Now this is a magnificent price action. It is like driving a Ferrari today. Let me observe the higher time frames in detail in the same trade. You can even spot these setups without opening any lower time frames. We already know that price hits 3 imbalances at the same time. But let's get a closer look at the 30-minute chart in detail. You can see the clear SR flip point. And also notice this inner liquidity area with 3 candlestick low points. Now you have an eagle vision. Let me show you clearly what happens here. We had the bullish targets above, and we needed a fuel, a gas station to go up. Price first builds this liquidity area and strikes down all the stop losses at once. It hits the imbalance with the SR flip point to get all the fuel needed. In my price action diary, I have 3 types of fill. Simple fill is imbalance taps. Advanced fill is imbalance taps plus liquidity sweeps. And the extreme fills is imbalance taps plus liquidity sweeps plus SR flip points. So more confluences are better for the trades. However, do not forget this. If you want to have higher success and better win rates, then you also need a direction, a clear targets. Clear targets like equal highs or previous day highs, or maybe a combination of them. As you can see, trading is all about combining multiple concepts together. Let's start by analyzing Bitcoin trades using our favorite indicator called ICT High Time Frame from FADI. As you already know, this is a multi-time frame indicator that shows us several different time frames and imbalances in a single simple layout. This is the reason why I personally love this indicator so much. First of all, please notice this SR flip line that appears right in the middle of the chart. This is actually a very tricky and important one, and I really need to keep it on the chart at all times. Also, you can clearly see the multi-time frame imbalances showing up at the same time. So, I will mainly be focusing on these areas in order to look for and take a short position. Here, you can also notice swing failure patterns happening right inside those imbalances. As you already know, combining multiple imbalances with multiple swing failure patterns can create an extremely strong and powerful trading setup. The one thing that I am worried about this is 3R chart. This is because there's something very important here. This imbalance here has never been touched before. If you carefully look at it, you will also notice that the SR flip level has not been hit either. Now, when looking at the lower time frames, such as the 15-minute chart, you can clearly see that the market structure actually breaks right at the point of multiple imbalances and swing failure pattern. This becomes a very classic low time frame trade entry. We are just following the structure closely. However, the question is, should you risk 1% or maybe only 0.5% for this particular trade? As you should remember, we still have an SR flip level that has never been touched, and 3R imbalance has never been hit either. So, do you think this kind of price action could actually happen? The price could back deeper and deeper, finally hitting the SR flip level, and also reaching the 3R imbalance as well. Of course, this is something that definitely can happen. So whenever I feel conflicted or confused or not sure at all, the best thing you can do is just simply to reduce your risk. Do not take unnecessary or reckless risks. Let's look at another trading example with multi-time frame imbalances that are very clear. But this time I'm facing another problem. This time I have an extremely large area to cover. Just look at this gigantic imbalance that is standing out here. Do you think that this type of price action can really happen? The price keeps going down and then going down again and continuing further down, slowly filling this gigantic imbalance and then finally reacting. Yes, it is highly possible for that to happen. Then the question is, what should I really do against this kind of situation? Let's open the lower time frames carefully and observe the price action in more detail with more attention. First of all, you can clearly notice these obvious targets, equal highs, lining up with the previous day's high. So these targets give me a strong indication and a very solid reason to believe that the price has strong motivation to go up. However, if you remember correctly, we still have this gigantic imbalance sitting below. The price may easily keep crashing down here in order to fill this large imbalance area. Who really knows? No one can ever know the future for sure. So if you are confused or if you are not feeling comfortable using cost average systems like the yo-yo method from the masterclass, then the best action here is simply to wait for the bullish action on the lower time frame that matches the upper trend. However, as you know very well, waiting is always very problematic for traders. Sometimes you can wait for many long hours just for a single trade to show up. In this case, since you already know that this is the possible market structure breakpoint, you can simply place a stop limit or a trigger order right above this important market structure point. This way, you will not need to wait all day long just for a single trade. Instead, you can save your time and also keep looking at other charts for more opportunities. Let's take a look at a couple of extremely important educational trading materials. We will focus on the top gaining coin of the day. At the top, you can see that our beloved trading indicator ICT high time frames is active. This indicator helps me to observe multiple time frames at once. If you've set it up, I will conduct a reverse analysis on this coin. Notice the 5-minute support and resistance Philip line here. Carefully note this yellow circle. Then check out our indicator, where it appears at the multi-time frame imbalance price level. The price action is here actually really clear. Now, what happens just before the SR flip and the multi-imbalances? It's the inner liquidity sweep location as well. Okay, let me make it clearer for you. Price sweeps the inner liquidity area and crashes into the SR flip zone, which happens to be at a multi-imbalance zone. Once you see this price action every day and practice on the charts, you will start recognizing this pattern everywhere. But the golden question still remains. How do you trade this? Actually, you have two options. First, the lazy way, which is basically building a cost average around the entry area. What you do is quite simple. You place small limit orders at strategic smart money points. For example, right under the liquidity sweep points, around SR flip points, and inside the multi-time frame imbalance areas. Then you wait for the orders to be hit, creating an average for you. Now, what about the complicated way, the harder sniper approach? Let's observe the same price action area on the 1-minute chart to get closer to the entry location. If you want to be any kind of sniper trader, you have to wait. Wait for the inner structure to shift in your favor. For example, this market structure break with the imbalance area, which gives you the first trade idea. But the first structure breaks can be quite tricky. For a better entry with more confirmations, you might want to wait for the first break of structure, like in this trade. Then keep trading the structure until you reach a specific target. Why this is the hard way, I say? Because it takes a lot of time to trade like this. If you look below, you will notice that this price action took 2 to 3 hours to be completed. It's not just that easy. Okay, let's talk about more educational material here. Let's talk about market opens and the Bitcoin here, like the 9:30 a.m. New York opening. If you carefully look here, you will notice two specific support and resistance Philip positions right before the market opens. But the first market open is also supported by the previous weeks and months highs. Masterclass students know these as trade amplifiers, which make the trade areas stronger. However, in my opinion, both lines are interesting and create a good bounce opportunity. At this point, we use our indicator to get some help. Notice how the price sweeps all the inner liquidity areas here and taps the multi-imbalances from multiple time frames at once. So this is a quite interesting market open. Let's close up on the market opening and the entry locations. Remember what is happening here. Price sweeps all the inner liquidity first. Then price taps all the multi-imbalances from multi-time frames are best trading view indicator. Then the price hits the great support and resistance flips with the amplifiers. The rest is a very classic price action structure break, imbalance, discount zones, and a 2-hour compact trade opportunity. And the last question, where is the price heading towards? Yes, we have this clear target here, the previous day high point. Actually, if you carefully look at it, this is a very classic PO3, the power of 3. Do we have another trading option? Of course, a lazy way of creating a cost average. With all the inner liquidity sweep, you jump into a trade with no confirmation at all, just with small orders. But maybe the price will keep crashing into deeper support and resistance flip. Who knows? You keep setting multiple small orders into the deeper zones is a wise idea here. At the end, you will be creating a nice average zone. Now, what about 1 minute micro scalping with the Nasdaq after the market opens? Do we use another pattern or